We often hear about the sheer cost of living in London, right?
Ah,
And today, we're going to dig into something that directly impacts your take-home pay, especially if you're considered a higher earner in the city.
hmm
ProTax Accountant, the well-known UK accounting firm, they've actually brought us together to really understand how these frozen 40% income tax thresholds are, well, squeezing those earning higher salaries right here in London.
That's right.
We'll be looking at the Spring Statement 2025 and, other relevant data to get a really clear picture of what's happening.
And it's crucial, I think, for you listening to understand a key point right away. When we talk about a frozen tax threshold, what we mean is an income level.
Hmm.
It just doesn't budge over time.
Right.
Even when inflation, the cost of things or average wages are generally going up.
So it stays static.
Exactly. And what this can mean for you is that as your earnings hopefully increase, you might find yourself sort of crossing into a higher tax bracket simply because the threshold itself hasn't kept pace.
Okay, so let's get specific for you then. In the UK right now, the personal allowance, that's the income you don't pay any tax on, sits at £12,570.
Correct.
And the threshold, where you start paying that higher 40% tax rate, is £50,270.
Yeah.
Now, crucially, these levels, they haven't increased since 2021.
That's a key point.
And what's more, they're set to remain frozen right through until April 2028. That's according to HMRC's own rules.
Yeah, and what's really interesting for you to consider is how how they used to work. Typically, these thresholds would be adjusted upwards each year.
To match inflation, usually.
Exactly, to account for inflation. And this protected your earnings from something called fiscal drag.
Ah, yes, fiscal drag.
Fiscal drag is precisely what happens when these income levels stay fixed while your wages go up. More of your income then becomes taxable, and a bigger chunk of it ends up being taxed at that higher 40% rate.
Even if the actual tax rates, the percentages, haven't changed.
Precisely. It's a kind of subtle way the government can increase the overall tax it collects without announcing a rate hike.
And it seems this freeze is hitting those of you in London particularly hard. Why exactly is that?
Well, if we look at the bigger picture for you living and working in London, the main reason is simply the higher average salaries we see here compared to the rest of the UK.
Okay.
Because your earning potential tends to be greater in London, these static income thresholds mean that, a larger proportion of London's workforce is likely to find themselves moving into those higher tax brackets sooner than maybe their counterparts elsewhere.
Right. So when we talk about high earners in London feeling this squeeze, what sort of salary levels are we talking about? Who should really be aware of this?
It's a good question. While the average full-time salary in London was around £41,866 back in 2024, according to the ONS, when we discuss high earners in this specific context of being squeezed by the frozen thresholds, we're generally focusing on, say, roughly the top 20%, so people earning £60,000 or more.
Okay, the top fifth.
But, and this is important, even if your salary is currently below that £60 mark, you might be feeling the effects sooner than you think. Consider if you're earning, let's say, around £45,000.
Right.
The Office for Budget Responsibility, the OBR, they're forecasting inflation at about 3.2% for 2025. And the ONS predicts wage growth of roughly 5.8% for 2025-26.
So wages are still rising faster than inflation notionally.
In that forecast, yes.
Yeah.
So if you receive those kinds of average pay increases for just a couple of years, you could very easily see yourself tipping over that £50,270 higher rate threshold.
Wow, yeah. That really paints a picture of how quickly this can creep up on you. And are we actually seeing more people like you in London ending up paying this higher rate of tax?
We absolutely are. HMRC data from the 2023-24 tax year shows a really significant increase across the whole UK in the number of people paying the 40% tax rate, or indeed the additional rate above that.
And what are the numbers?
That figure now stands at 6.1 million taxpayers. Compare that to just 3.3 million back in 2010.
That's nearly double.
It's a huge jump. And given London's economy, with its high concentration of jobs in well-paying sectors like finance, tech, professional services, it's highly likely that this proportion, the percentage of people paying higher rates, is even greater right here in the capital.
Yeah, that makes sense.
We even saw someone recently on X, formerly Twitter, a London taxpayer earning £52,000 expressing their frustration, basically saying they suddenly started losing 40% of their income, a bit over the threshold, to tax.
Right, that marginal rate hitting them.
Exactly.
Yeah.
It really brings the impact down to a personal level for you.
It certainly does. Let's actually look at what this means for your money, for your actual take-home pay. Can we take a specific example, maybe someone earning a bit more, say, around that level?
Absolutely. Let's consider someone in London earning, say, £55,000 a year, as our sources illustrate.
Okay, 55K.
First, they get their personal allowance, £12,570, that's tax-free.
Yep.
Then, the income between 12,571 and the higher rate threshold of £50,270, that bit is taxed at the basic rate, 20%.
Which comes out to?
That comes to £7,540 in tax on that portion. Now, the income above that higher rate threshold, so in this case, the £4,730, between £50,270 and their £55,000 salary.
That's the bit hit by the 40% rate.
Exactly. That's taxed at 40%, resulting in £1,892 in tax just on that slice.
Okay.
So if you add those two tax amounts together, their total income tax bill is £9,432.
Right. £9,432 on a £55,000 salary. But that's not the full picture, is it? You also have to factor in national insurance contribution.
That's absolutely right. NI is crucial. For the portion of your income between the personal allowance, £12,570, and that higher rate threshold, £50,270, the national insurance rate for employees was cut fairly recently down to 8% from April 2025.
Okay, so 8% on that band.
Yes. For our example, £55,000 earner, that would be an additional £3,056 deducted for national insurance.
Right. So if you take their £55,000 salary, deduct the $9,432 income tax, and the $3,056 in national insurance, what's left?
Their net take-home pay works out to $42,512 gross.
$42,512 from £55,000 gross.
Correct. And what's really significant for you to note here is the comparison. If this same person had earned, say, £50,000 just the year before.
Just under the threshold.
Exactly. They would have avoided that 40% tax band altogether. Their total income tax would have been just £7,540. So that relatively small £5,000 increase in salary has actually resulted in them paying an extra $1,892 in income tax.
Wow. That really highlights how much these frozen thresholds can, well, bite into your earnings. It almost feels like, you're being penalized for earning just that little bit more.
It can certainly feel that way for many people.
So how much money is the government actually bringing in because of this fiscal drag phenomenon? Is it significant?
Well, scale is quite substantial for the UK as a whole. The Resolution Foundation, their independent think tank, they estimate that this freeze on tax thresholds is set to generate around $25 billion by the 2027-28 tax year.
$25 billion.
Yes, and with approximately $12 billion of that expected in 2025 alone.
That's a huge amount of extra revenue generated without actually raising tax rates.
Precisely. And if you then consider the high cost of living you face, specifically in London, we saw a figure suggesting average rents for maybe a Band D type home around £2,280 a month.
Steep.
This extra tax burden coming out of your pay packet can have a really tangible impact on your disposable income, your ability to save, or just cover bills.
Yeah, it's not just abstract figures on a spreadsheet, is it? These are real pressures you might be feeling day to day.
Exactly right. We have an example based on HMRC records from 2023-24 of a marketing manager called Sarah. She was earning £48,000.
Okay.
She then got a 5% pay rise, which is, pretty standard, taking her salary up to £50,400.
Just tipping over the £50,270 threshold.
Just over. And when she looked at her tax account, she saw an extra $252 tax bill just on that small amount over the threshold. Her feeling, apparently, was that despite earning more, she wasn't actually getting ahead financially. More of her money was just going straight to HMRC.
Yeah, I can imagine that frustration. And there's something else, isn't there, that you should be aware of, particularly if you've recently changed jobs or perhaps had a promotion, this issue around emergency tax codes.
Yes, this is a really important practical point for you, especially if you've had any recent changes in your employment situation. Sometimes when you start a new job or maybe get a significant pay rise, your employer might put you on an emergency tax code.
Often shown as M1 or something similar on your payslip.
That's right. M1 is a common one. And what this can do is result in you being overtaxed, sometimes quite significantly in the short term.
Ouch.
We saw an anecdote on X from a contractor in London who started a new £60,000 job. They found they were being taxed at 40% on their entire income initially, not just the bit above the threshold.
Goodness, that must have been a shock.
It was. And apparently it took them 3 months to sort it out and get that overpayment refunded.
3 months is a long time to be significantly out of pocket.
It really is. And HMRC's own figures showed that over 1 million taxpayers across the UK faced this issue in 2023-24. Given London's dynamic job market, lots of movement between roles, you might be more susceptible to this happening to you.
So what can you do if you suspect this is happening?
Well, the good news is you can be proactive. You should check your personal tax account online. The address is www.gov.uk. Check income tax current year. You can see your tax code there and take steps with HMRC to get it corrected if it looks wrong. Don't just assume it's right.
Good advice. So, given all this potential pressure on your finances in London, the squeeze from frozen thresholds, the risk of emergency codes, did the Spring Statement 2025 offer any relief? Any changes to these thresholds announced?
Well, what's really notable for you looking through the Spring Statement 2025 documents is what wasn't included.
Ah,
There were no adjustments announced to these key income tax thresholds, the personal allowance, or the higher rate threshold. They remain frozen as planned.
so the government is essentially continuing with this policy of fiscal drag.
It appears so, yes. It's likely seen as a way to generate significant revenue for public services without needing to announce unpopular tax rate increases.
But it comes at a time when you in London are also facing rising costs elsewhere, doesn't it?
Absolutely. We've seen council tax increases. Figures mentioned an average rise of 109 downs, taking a typical Band D bill to around £2,280 annually in some areas. And water bills have also jumped significantly, maybe around 26% on average, according to some sources, bringing annual bills towards 603 km.
So it's a cumulative pressure.
It really is. And it resonates with that sentiment we saw expressed online. The person on X, a city worker apparently, saying 40% tax on 51K in London, I'm barely scraping by. It might sound dramatic, but it reflects the genuine financial pressures many of you are facing when you factor in housing costs, transport, childcare, and now this increasing tax burden via fiscal drag.
Okay, so to sum up for you listening in London, what's the main thing, the key takeaway from this discussion today?
I think the key message for you today is that these frozen income tax thresholds, particularly that £50,270 higher rate threshold, are indeed putting a noticeable squeeze on higher earners in London.
Mm-hmm.
As your wages potentially increase, maybe due to inflation or just career progression, more of your income is likely to be taxed at that higher 40% rate simply because the goalposts, the thresholds, haven't moved.
Right. And importantly, the Spring Statement 2025 didn't offer any immediate changes or relief on that front.
Correct. The freeze continues as planned until at least April 2028.
So as this closer look at how these frozen tax thresholds are affecting your income in London has raised some concerns or maybe sparked some questions for you, what would be your best next step? What should you do?
Well, this is an important point for you to consider now. If you are worried about how these frozen thresholds might be impacting your personal financial situation, or perhaps you'd like to explore strategies for managing your tax affairs more effectively in light of these circumstances,
Yeah.
I would strongly recommend reaching out to the experts who actually arranged this discussion for you today, the team at ProTax Accountant.
Right, pre-tax accountant.
They have a really deep understanding of these specific issues affecting Londoners. They deal with this day in, day out, and they can provide you with personalized advice and guidance tailored specifically to your situation. It's worth getting that professional input.
That sounds like excellent advice, especially with things being quite complex. And on that note, perhaps here's a final thought for you listening to mull over. With these ongoing fiscal pressures clearly evident in London, what proactive steps will you be taking to navigate the current tax landscape and ultimately ensure your own financial well-being?